Hi guys, this is Rose Trading Journal. In today's lesson, I'm going to be teaching you market structure. Now, market structure is basically the anatomy of the market. In order to be a profitable trader, you need to learn your market structure. So without further ado, let's get right into it. Now, the market moves in three directions. The market is either in a downtrend. Whenever I hear someone says the market is bearish, it means that the market is in a downtrend. Then you have an uptrend. Whenever the market is bullish, whenever I hear somebody say the market bullish, it means that the market is in an uptrend. And then you have the market moving sideways, which is called consolidation. So this is an example of the market moving sideways. The market just goes down, up, downwards, upwards, downwards, basically moving sideways within a box. Basically it does moving sideways. Now, how do you determine whether the market is in an uptrend or a downtrend? How do you know? What do you use to determine whether it's in a downtrend versus whether it's in an uptrend versus whether it's moving sideways? Now, the criteria to determine whether the market is in a downtrend is that it specifically has to be making what is called lower highs and lower lows. Now, what is a lower high and what is a lower low? I'm going to show you. Now, this, say for example, the market starts here. This will be your high point, right? Then the market comes down. This becomes your low because it is obviously lower than the high. When it comes back up, it doesn't quite pass the high, so it becomes your lower high. Basically, it's lower than the previous high. Now, if this is your low and this is your high, then this becomes what? Your lower low, right? And then this becomes your lower high, and then this becomes your lower low, and so on and so forth. Now, let me label it so you can understand. Again, this is your high, and then this becomes your low, right? If this is your high, then this becomes your lower high because it is lower than the previous high. If this is your low, then this becomes your what? Your lower low because it is lower than the previous low. And this becomes your lower high again, right? And then your lower low again because it is lower than your previous low. Now, this is your criteria to determine whether you're in a downtrend. The downtrend must have a lower high and a lower low to be determined as a downtrend. Now, how do you know when you're in an uptrend? Right? You must have an higher high, right? You must have an higher high, and you must have a higher low, right? So say for example, this is your low, right? And then this becomes your high. Then this is going to become your higher low, then your higher high, then you're going to have your higher low, and then you're going to have your higher high, right? This becomes your higher low because it is higher than your previous low. This becomes your higher high because it is higher than your previous high. So your criteria for an uptrend is that you must have an higher high and you must have a higher low, right? Now let's go on to, so we'll cover downtrend, I will cover uptrend. I will know what are the criteria that we need to determine whether it's in an uptrend or a downtrend. Now, how you know when the market is moving sideways now, right? The market is moving sideways when you're not creating any higher highs or any lower lows, right? You're just moving sideways. That is how you know when you're basically in a consolidation. Now, when the market breaks out of the consolidation, you're going to have your higher high. Let me just move over the chart a bit. Let me just move this over so you can see. So when the market breaks out of the consolidation, you're going to have a higher high, because this high is going to be higher than the previous high that was there. Let's say, for example, it didn't break out to the high, maybe break out to the low. Then you're going to have a lower low, because this is lower than your previous low. You understand? And then the market will pull back. The market will pull back, and then you're going to create another lower low, and so on and so forth. So that's basically it, guys. In the next lesson, I'll be going over this on the actual chart, so you'll have a better understanding of what the higher highs and higher lows are on the actual chart with the candlesticks. I'll also be going over change of character, and basically what change of character is, where it happened, and what is the criteria for a change of character. So thanks again, guys, for watching. Please like, share, and subscribe, and comment. Thanks.